Good morning, everyone. I'm really excited for our guest here today. He's a good friend of mine, someone I've known quite a while, and he's helped a lot of our current customers and many people that I know. His name is Doug Arthur. He is the Managing Director of Windsor Capital. And Doug, thanks for joining us, and I really appreciate you taking the time to do this today for everyone.
Oh, it's my pleasure, Scott. Thanks for having me on here. What I'd like to do first, I'm going to spend about a minute or so sort of laying out the background of my work career so you all will have an understanding from where I'm coming from. I spent about 25 years in commercial banking, not all at one time. I took a hiatus for a few years and did a leverage buyout on a company in the mid-90s, worked out with a few partners, sold my interest, went back into banking. My banking experience, it ranges from corporate banking to financial institutions work to small business banking, to actually running a workout department for 8 years just before, during, and after the Great Recession. Also run a commercial real estate group for a local bank as well. I got out of banking about 7 years ago, went into merchant banking and private debt and private equity. So I spent time still as a capital provider, but on the other side of the fence, outside of the regulated capital markets. Therefore, I've got an extensive experience with both regulated lending and the alternative lending space. After 5 or 6 years of that, I transitioned to the advisory side, which is where I sit now. So instead of writing checks into deals, I actually give advice and help companies structure the optimal capital structures based on their current needs. So that's probably what we ought to focus in on today, because these are certainly some unprecedented times that we're seeing.
You know, the purpose of this call and why I wanted to set Doug up most importantly, and why Doug here today, as we sit here now, it is Wednesday, April 1st. I say that because these things have changed dramatically in the last week. What's available, what's out there. So by the time you're seeing this video, I want to know you guys to make sure that you know it's April 1st. Things are going to change. Friday's the real big day that the first applications can start to be accepted. And at least as of now. And so from this call, from this time, the goal is for you to be able to assess quickly where your business is at and what government programs might be applicable to you, which ones are going to help your business, which ones you should apply for, which ones you may be excluded from, and if and when can you apply to them. Should you apply to all or some, or what are the rules? I asked Doug to give us a little bit about his background, and as you can tell from what you just heard, he has extensive knowledge in traditional banking, debt, private equity, and now in this government program space as well. And hey, look, there's lots of private programs out there, so whether traditional lending or this SBA program is not a fit for you, there may be some others that are perfectly suited for what you're looking to do. My goal was bringing this to you. Doug's helped educate me a ton. A lot of the stuff I've learned outside of what we do in our core business, mobilization funding, has really been at the hand of learning from what I've seen Doug do with our current clients, but also what I've seen and how he's helped some of the other folks that we know. So, Doug, first question for you out of the gate is, can you just tell us a little bit about what you're hearing from your clients now, what you're hearing in the community? What are the problems that are most being addressed or considered by business owners today?
Business owners today, their biggest issue is the anxiety in the workforce. And of course, we have the coronavirus anxiety component of it, and people are wondering, should I stay home from work? Should I go to work? So they're not quite sure what to do themselves, but the business owners are having that same anxiety, but from a cash flow perspective. They're like, do I have enough cash to continue to pay my workers? Are my vendors, can I pay my vendors? Are my customers going to pay me? Really the crux of the matter here is communication. If I had one thing to tell these small business owners, is get on the phone and communicate with all the different stakeholders that are involved. Communicate with your employees, be open with them of what's going on. Communicate with your customers, say, look, I really need you to come through and pay what you owe. Communicate with your vendors and tell them what you can pay. Communicate with your lenders and say, look, I need to understand that you're going to be there for me. And if you don't have a lender already lined up, figure out how to open up those communication channels with your local lender, or go straight to the sba.gov website.
And so you brought up two good questions, things I've heard from our customers, things I contemplated myself, quite frankly, and have made some decisions on. talk about employees, the anxiety of cash flow, communicating with those vendors. Is there a specific order, or is there a decision tree that you feel or you've seen the good business owners make decisions on, and how they've gone about that cadence of choice?
I would start with the customers, because that's where your source of cash is coming from. Looking at your accounts receivable, what needs to be collected, what's the easiest to collect, what's past due, what should have already been collected, and have conversations with those customers and see if they can go ahead and get those checks processed. If it's a sizable customer that you have and cash flow might be more abundant for them, see if they can accelerate some of the accounts receivables that they already owe you. Secondly, I would communicate with the lenders to make sure that you have access to capital coming in as well. And then third, make sure that you're talking to your employees so that you can actually provide the services and or the goods that your customers are expecting. Have conversations with the vendors to say, look, I need you to continue to ship me what I need so we can keep the wheels of commerce going. Because once one stops, it's sort of like a domino effect. And unfortunately, when cash is in short supply, everybody wants to hold on to it. And it's actually the worst thing. It exacerbates the problem, which is really why our federal government has come to the rescue and saying, let's try to get these loans out. This is the SBA is nothing more in this instance, an arm of the Treasury Department. The Treasury wants to get $350 billion into small businesses' hands as quick as possible, but they only have one window. So they've gone to the commercial banks in this country and said, hey, open this window for your clients. The money is here, but we can't get it to everybody. You have a much better chance of getting it to them than us. So sorry, I rambled on a little bit, but I thought it was important to understand that once the cash stops at one point in the cycle, the wheel will stop turning.
Yeah, no, I couldn't agree with you more. That if everybody just sat on the cash and nobody kept operating or finding the paths to business, then we're going to end up in a different scenario for sure. Related to that tree, you talked about getting in touch with your accounts receivable first. Who owes you money? Second is, who do you need to pay money to make sure you, from a vendor perspective, you can bring in supplies? And then third, getting to your employees. Talk a little bit about what your experience is from either yourself, other business owners, or just your opinion on when and how you start making decisions on employees. We saw, unbelievable numbers in terms of unemployment. I saw an article this morning where we could see is upwards of 20 or 25% unemployment or higher even. When is that decision for a business owner to make that choice? And how do they decide? We talked to someone last week about furloughing versus layoffs versus termination. What are your thoughts around all that and just how to make those choices?
It depends on the type of business. For example, the restaurant business. If you're not allowed to have people come into the restaurant, then the wait staff is obsolete. They need to be furloughed or terminated at that point, as harsh as that sounds. That's why the program, and I keep going back to it, is there to protect the paycheck. So those people can get some money in their pockets so then they can pay their landlords, et cetera. So I tell each business, look at your core business function and see which employees are essential for that function. Make sure those stay in place at all costs. Look at the fringe activities that a business may be in, and maybe it's not the right time for that. So if you don't have the ability to keep everybody on staff, you have to make those hard decisions of who is nice but not necessary to keep around at this point.
These are tough decisions to make. Candidly, I don't know if there's a right answer or a wrong answer. I've heard them all, and I've talked to many of our customers, friends of mine who are making these decisions, ourselves included, and it's an unreal choice, and it's not fun. But to stay in business is the most important thing, and being able to take advantage of some of these government programs, which is what I want to shift our conversation into now. hopefully will give you the ability to be there when we come out of this and rehire those same employees or bring people back on or increase hours, et cetera, whatever those options are. So getting into that, can you talk, let's focus a little bit now on what programs the Treasury and the SBA through the commercial banks here are put out. How does a business owner, what are they, first of all, and then how does a business owner go about actually making the decision for which one is best suited for them?
Okay, let's talk about the EIDL, the Economic Injury Disaster Loan Program, which has been around for a while. You can apply for that directly online. You don't have to go through any other lenders. In fact, you can't go through other lenders. So you have a direct access to the SBA on that. They will loan up to $2 million based on what your needs are. You don't pick the loan amount in that. You input all of your circumstances, and then they come back to you with, we will loan you X dollars. It's a very advantageous loan. It has a long amortization period, up to 30 years, with preferential interest rates, I believe, at 3.25% right now. And like I said, a lot of these things are changing. So what you hear today may not be 100% accurate when the programs are finally rolled out. The second one that just came out and was part of the CARE Act, the Paycheck Protection Plan, PPP, you may have heard about. Those loans are up to $10 million, and they are specifically for payroll and payroll-related benefits, mortgage payments, lease payments, utility payments, everything that a business would need to keep the lights on. If you have laid off people already, you can bring them back on and pay them. Part of this loan will be forgiven. It's not a given that it's forgiven. You have to apply for that later. But they're, again, very, very advantageous rates. They came out yesterday with 0.5% interest to be paid back over 2 years. So basically, when you look at it, it's an advance on payroll that may be forgiven. You can actually apply for both of these. You can't use both for the same reason, but you can apply for both. For example, let's go back to our restaurants. If you had a restaurant that was in business, they could use the EIDL to purchase their inventory, and then they could use the PPP plan to pay their people.
And the delineation and understanding of how that happens is going to be decided upon by the business owner first and then verified by the commercial bank that they partner with?
Well, as I mentioned, the EIDL is direct with the SBA. The PPP, you have to go through a commercial bank that offers SBA products. And the SBA has just made every bank a preferred lender, which means it does not need the SBA's blessing to be funded. That's going to put it'll add tremendous speed to the process, but there are banks that might look at that as an additional burden that they didn't have the SBA buy-in prior to making the loan. It is the onus is still on the commercial bank to properly underwrite and document the loan.
I think the misconception out there is that the SBA makes the decision, and if you apply for an SBA loan and are denied, that means the SBA denied you. Can you talk a little bit about, one, if that's true, or two, if it's not true, why?
Sure. My understanding is the SBA almost acts like an insurance policy. It's up to the individual lender. And I tell clients this all the time, that not all SBA lenders look at opportunities the same. Some won't go out of their trade area. Some won't underwrite loans that are under collateralized. Some won't do just cash flow loans. Each bank determines its own risk appetite, and then they will underwrite that. And if they're not a preferred lender, they will then submit it to the SBA to have them confirm their decision that if it is properly documented and if the loan goes bad, that the SBA will then come in and reimburse them for whatever percentage the guarantee was. And it's different for different types of loans. So we won't get into the percentages right now, but 75% is a good rule of thumb.
What are you seeing clients of yours or just business owners now talking in the circles that you're in? What are the best business owners doing right now that are taking advantage of where they're at and the best programs and what's available to them? And then conversely, what is the opposite of that? What are the business owners that just are not doing anything doing it correctly? Where are they falling in line? And so we know A, what to do best, and B, we can help people to know what not to do.
Well, the best business owners are communicating, again, with their capital sources, their customers, their vendors, and their employees. They're organized. They have all the data prepared to submit to the banks, and they're ready to go. Their tax returns are up to date. Their internal prepared financial statements are up to date. They have their accounts receivable, payables agings up to date. When it comes time for them to apply for the loan, there's a good chance that loan package is going to the top of the stack. I spoke with a bank this morning that has 700 opportunities on their waiting list. So they are now ferreting through to see which ones make the most sense for them, because they obviously can't get to all 700 opportunities in the next week or two. The business owners that are going to find challenges are those that haven't filed recent tax returns, that don't have good internal accounting, can't produce financial statements. They're going to struggle with this. It's not to say that they won't get the loan, but if a loan officer in a bank can spend 2 hours with one customer versus 20 hours with another, they're going to look for the better organized customer to dedicate their time.
So let's say you're not organized. I don't want people to think I'm not organized, so I'm just going to quit right now. So if you're not organized, what can you do, or what is your best suggestion if you had a client that came to you and they're not organized, but say, look, I have my bank statements. What else can I do? Is there one of these loan programs where, your tax returns, your financials, your AR and AP in perfect order and internally prepared you can be more suited for than any of the others?
I would say if you're better organized, I would do two things. I would apply for the regular 7A loan, and I would apply for the PPP loan, which is also part of the 7A program. The PPP is going to go much quicker. It will be the stopgap cash that most businesses need, while the 7A will handle some of the longer term needs of the company. But if you're not organized, you need to find, and this is not a self-promotion, but you need to find an intermediary who can help you get organized quickly, that has spent a lot of time already developing the relationships with the bankers that will then provide the capital. So they can, in fact, become your spokesperson.
Doug, how would you recommend someone go about vetting a good intermediary? There's so many people out there in my own business that call on us all the time, and they have what I call a file. That's what they consider a business owner as a file. And we just don't work with those folks. But, I always feel bad for the business owner because they're working with someone who they believe could help them, or they want to help them. And not every one of those people can. So how do you go about, if you're a business owner, how do you go about vetting that intermediary to know who they should be talking to and invest their time? Because they only have so much time themselves. What's the best questions they ask? Is there a way to figure that out, or a website, or a group, or affiliation, or a network of some kind?
You definitely should find an intermediary through a referral source. Don't pick up the phone and just call somebody out of the phone book or pick them off of the internet. Try to find somebody that you have a common client, vendor, or some type of other contact with. So have the conversation. The questions to ask would be, how long have they been doing this? What has their success been? My business is not perfect. It has blemishes. How would you see trying to organize my business to apply for capital because I have a low credit score, or I lost money last year? Ask. Don't try to. This is no time to try to put window dressing on your company. People don't have time for that. You want to show the good, the bad, and the ugly, and that's one of the ways that I run my business. Is I'll put together a 2-page memo to show to the capital providers stating the good, the bad, and the ugly up front. And therefore, and they appreciate that. They'll say, Doug, this is a deal I think we can get done, or no, we need to pass on that. And it's the same when the person is interviewing an intermediary to find out, what can they do and what is their approach. If they tell you, yeah, we can get this done every time, they're probably not being 100% forthright.
Good point. One other question for you. Are there certain banks or types of banks that people should go to or to avoid?
Well, I would say the go-to banks would be your community banks because you can generally go in and talk to a real person. Going back to this PPP loan, for instance, it's up to $10 million, but it only covers payroll, benefits, utilities, rent, and mortgage payments over an 8-week period. There are very few customer or companies out there have $10 million of expenses like that over 8 weeks. So you may have a you may have a $25,000 a week payroll, bump it up to 30 with benefits. That translates into 120 a month or 240. Throw your rent in and a few other things, you might be looking for a $300,000 loan. There's a lot of banks that can satisfy that. If you go to the national banks or even the regional banks, while they do a phenomenal job with larger clients, sometimes you'll get lost in the shuffle. I would say go, even though we're under safer at home policies, but a rule of thumb is go talk to a lender that you can go meet in person, and then you can size them up as well.
Good advice. All right. In conclusion, you've put a lot of programs together. I think people get a chance here to see what we need to do and what some questions they can ask themselves and really how to go through the decision tree themselves. Where can they go find the resources now to get into the nitty gritty? If they want to go apply for the EIDL loan, the disaster program, or right to the PPP loan, what do they do now if they're not working through an intermediary or they want to get some more information for themselves? What's the best source to do that with?
Probably the best source would be sba.gov. It's a cumbersome website, but you can navigate through it. You can find exactly what you need. You can find the forms on there. Like I said, in the EIDL, you can actually apply online, or you can download and do paper forms that give you a number to, an address to send them to. But if I had to give one place right now, it would be sba.gov.
And Doug, if folks wanted to get in touch with you, what's the best way for them to go about doing that?
Generally, the best way to get in touch with me, you can just call me on my cell phone. It's 813-598-4447. Happy to have a short conversation, see if we can get you pointed in the right direction, and hopefully help you with a capital solution.
Thank you very much. Everyone, I hope you enjoyed this conversation. I hope it proved fruitful. Again, the intent of this was to help you sort through the information that's out there right now. This call was done on April 1st. So as of this moment, we gave you the best information we could. Things may change, but this seems like this is going to be the bulk of the way that the programs are going to get rolled out. Doug, I really appreciate you taking the time to do this. This has been great. I've learned a lot. It's going to help me with the conversations I have today and moving forward. And I hope for all of you, it does the same. Thank you very much, Doug. Anything we missed or you would like to touch on?
No, Scott, I appreciate the opportunity. I'm not a webcast guy, so this is actually my first one of these. I wouldn't say I'm a polished actor or anything, but hopefully somebody finds a nugget of information that they can latch on to, because at the end of the day, it's all about helping people. Yeah, it is. And that's it. And that's the most important thing we can do today. So if you got something from this, please feel free to share it as you like. And any way that you can help somebody in your community, please go do the same for them in any way that can be. So everyone have a great day. Thank you very much. And I hope you got everything you needed. Take care.